In this video, we're going to be taking a look at why you are still a losing trader. You are still a losing trader because you can't differentiate good market conditions from bad market conditions. So a lot of traders are actually not unprofitable. If you are a trader and you find yourself either winning trades but having more losing trades than winning trades, it might just be because you can't differentiate these two things. So what do I mean by a good market condition? So if we are in a good market condition, more than not, we're going to have these four things, especially if you trade with the trend like most traders do. So if your strategy relies on very clean price action, it doesn't even matter if you're trading on the 1 minute up to the 15 minute, this all matters. So first, trending on the higher time frame. So on the higher time frame, are we in a trend or are we in a consolidation? This is gonna make the difference between good market and then bad market condition. Next is volume. Volume is very important. Are the trades, like, is there a lot of volume coming into the markets when you are trading? Is volume rising? Is the volume rising, or are we trading low volume areas? Volume is important because we want to be trading when bigger players are inside of the market. Next is a fundamental theme. What do I mean by this? I mean, is there a reason why the market should even be moving inside of the first place? Markets move based off of economics. They don't just move just to move. Most of the time, big moves happen because of economic themes. So if there's no major fundamental theme to push the market isn't really going to move as much. It's going to be more inside of consolidation. We want to have a theme that makes the market a little bit more one-sided because that enhances our edge. And then lastly, no chop. Are we inside of a chop, as I said earlier? Are we not chopping? Now I am running a free giveaway still inside of my Discord. Once we hit 1,000 members, I'll be giving away a prize worth of $500. To increase your odds of winning, just make sure you're subscribed to our channel, leave a like, and also comment on one of our videos. Inside of our free Discord channels, I do give away free signals. Now for the past month, market conditions have not been right, and I'm not gonna sit here and lie like I've been taking the most trades. I've been sitting on the sidelines, but I do give away free signals, and I've also started looking at stocks and giving away my stock trade signals as well. It's just a free community where you could talk, ask questions, just vibe. So that's it, and let's get back to the video. So if this is all good market condition, bad market conditions are literally the opposite of a lot of these. No fundamental themes, no volume, it's all choppy. We're not trending on the higher time frames. Like if you're a trader right now and you're losing a lot, literally just go to the higher time frames and then look at what you're trading. If you're trading NQ during this period, there was no action right here. There has been barely any movement. Now here's another caveat to that, because you might be like, oh, you might see somebody on Instagram, on social media catching trades. I'm about to explain how you can go about bad market conditions. Alright, so in a bad market condition, there are one of two things you can do. You can either sit out the market like I do, or you go for a lower risk to reward. Now, I prefer to just sit out of bad market conditions. Why? Because my trading preferences, I like catching high risk to reward trades. 1 to 5s, 1 to 4s. I like trying to catch those type of trades. But I could lower my risk to reward. And that's what you could do as well. Inside of bad market conditions, the smart thing to do is lower your risk to reward. Go for 1 for 1. Because more than not, you're going to get a push inside of your direction, but then the market is going to reverse, and it's going to do this a lot inside of these choppy market conditions. Another thing that you can do is find a bull market. Now I know a lot of traders on my channel do not trade stocks, but the stocks do offer a lot of opportunity when futures are choppy, like specific companies you trade, like companies like Walmart, Verizon. A lot of companies are in bull markets right now. So finding an opportunity in this type of market it would be a little bit easier than futures right now. So yeah, this is an example of somewhat bad market condition, and this would be an example of better. Same thing with gold. We're not really moving as much. One thing I forgot to mention is seasonality. Right now we're going into December, which is one of the most lowest volume months of the entire year, every single year. A lot of people, like during this time, lose accounts because you're trying to force it inside of a market that isn't moving as much. So seasonality plays a huge factor inside of all of this. And that's why having data is very important. I knew before coming into Q4 that this would be like top. A lot of Q4 is lower volume leading up to December, going into January. But after January, we tend to pick up a little bit more. So I know on the futures side of things, seasonality is super important, super duper important. One thing I want to leave with this, and it's something that every profitable trader I know usually preaches, is focus on A+ setups. Less is more. You know when. I don't even have to tell you. You know when an A+ setup is going to appear. You can look at all the things I just said about good market conditions and go find a market and trade that good market condition, and that would be an A+ setup basically. Because when you trade those type of markets, it's more likely than the trade is going to go in your favor. Having less is actually more. I haven't traded in like 2 weeks because I'm looking at the market right now. I'm like, nah, bro, I don't see any opportunity in futures. Like, sitting on the sidelines is better than risking your capital when you know for yourself that you don't make money when the market is in this way. Don't be greedy, honestly. People who say you can make 10% a month are you as a beginner or an intermediate or somewhere getting into your intermediate years. It's going to be really hard to make 10% every single month. You're going to have good months and you're going to have okay months and you're going to have bad months. But at the end of the year, all that matters is that you're up and you're beating the S&P. That's literally the goal of every single trader. So focus on A+ setups. Having less is a little bit more. Like, not saying just don't trade maybe once a month. You are a day trader, so you should be catching trades. But focus on at least just one trade out of the day. The best trade out the day. Don't try and trade 5-10 times, because in these market conditions, you're going to lose. Find the best trade of the day. Capture that trade. Focus on these A+ setups, and you're going to be just fine. So that's it for this video. I'll see you guys next time.